Okay, good morning. It's Monday the 2nd of November, and it's the debrief. Obviously, Monday morning debrief is probably one of the most important, purely because it's the start of the working week, and we've had the whole weekend to think about where the markets are going to move to. Just a quick wrap-up of Friday, just to get us in the mood. Obviously, quite a large move across the board, and we can certainly see that with what happened to the Dow and also what happened in Europe. Just a bit of a quick snapshot. Basically, last Friday, Europe opened all quite negative. FTSE was down 1.81%. The DAX was down 3%. The CAC 40 was also down. That was down 3% as well. Moving across onto America, a big fall. The Dow was down 2.5%, and the S&P was down 2.8%, and the Nasdaq was down 2.5%. So all in all, quite negative. And obviously, one of the main concerns there is the CIT group, which fails for bankruptcy. And that certainly suggested that we're not going into a V-shaped recovery. Most people are starting to focus on the fact that we will be looking for a W-shaped recovery. And as a result of that, equities have taken quite a large hit. And, I guess it's a complete turnaround from the night before when we had GDP growth. I think the thing that we've learned and what we can actually say about the move is quite simple. That we are in a recovery mode. The question is the length and breadth of this recovery. And that's the Dow with the hourly chart, and that's the big fall we saw. Obviously, GDP came out on Thursday night here. We rallied up there, and we took out that low. What I anticipate will happen today is that Asia will sell it aggressively, and then perhaps the US will say, hey, hang on, this list represents a good value area, so they probably might look to buy it. Technically, you can see that this is about a 50% retracement of these levels here. So obviously, if we take out a break to new lows, then we will go lower. The next target here is down at these levels here, so 9,452. So when you look at that, a 10% correction is off its highs. Sees it around, but even a 5 or 6% correction, it's really nothing on the scheme of things. Just having a quick look at that daily chart for the Dow, and it's just coming up. You can see there that it is coming under pressure. That's that mark we looked before, and a lot of people are saying, well, that's the level, 9,500 is where it'll stop. So there's two ways you can look at it. Obviously, at this level here, we're trading back into support anyway, which is back here. So from that area there, it might just hold. Anyway, but having said that, today the market will open weak and probably see things come under pressure initially. And let's see whether or not we can get it. Now, the double whammy for us is that tomorrow, 2:30, the RBA announces interest rate movements. It is anticipated we will get 0.25%. It will be interesting, though, in light of the weaker equity markets, it will be interesting to see actually what the Reserve says. Because although the US is appearing to be a W recovery, in Australia we haven't effectively gone into a recession, so they might teeter on the fact of a quarter, but there is there's an outside chance that given where equities are going, if we have an aggressive fall tomorrow, today, that they might hold off. And that would certainly hold the market at these levels. So just keep that in the back of your mind as we get totally bearish this morning, that if we have a big upset today in the local markets, that it could only suggest that the RBA will not move on interest rates. Okay, so keep that in the back of your head. Moving on to the currency markets, and I think the most important thing here is obviously with what's happening with the Aussie battler. Aussie's right on major support at the moment. There's the daily chart here. If it takes out those levels, then we go down to here. Okay, I think that's what we've all lined out. Good support at this level. The low there is 89.42. So if it takes out this area here, 89.40, that old low, then expected lower. I'll be guided by that break. If I see it back through 90.30, 90.40, I'll be happy to buy it. If it breaks through that area, though, that's where your stop is. So it does represent a low-risk buying opportunity for that Aussie, and I think that it'll only fall if, in fact, it's actually been held up on the back of those interest rate movements, and I think the reserve would more like to see the Aussie lower rather than higher. So that's sort of adding a little bit of evidence to the fact that they might not move as aggressively as what we thought on interest rates. So just keep that in the back of your heads. Okay, general commodities and a reversal of fortunes. Just looking at what's happening obviously with crude, which is the key one. Crude markets just going sideways. Right on major support here again. 77 seems to be the key. Break through that area, then we just come down. 74.50 is that area of big support that we've always talked about. So if anything it comes up, it is holding well at these levels. I mean, you know, from 82 to 77, you know, we're not even talking about a 10% fluctuation here. So if anything, it is actually holding well in wake of what people are feeling about the double dip recession in the US. So that I think will be widely watched. Having a look at some of the other markets now, we just heard obviously from particularly on the softs, the grain complex, wheat and the soybeans. Wheat basically closed down 9.5% at 494.25. Soybeans were down 10 at 976. Cotton was up 0.7. Corn was down 13.5. Now this is interesting. This is all on the back of the dollar play, right? It had nothing to do with the fundamentals as to what we're actually hearing out there in North America, and the fundamentals are not too good. Yeah, they've got problems on the weather front. Pete's got a report from Vic, who got it from George, who got it from Malcolm, who was in them states. Okay, we've got a big corn grower in the States, and he said basically everything's underwater and or frozen. So weather concerns should start to hit the market, and that should buoy prices up. So I think we've got to stay long those complexes. There's the soybean chart. Stops below there at 970 are fine, but I think you can quite comfortably hold. That's where your stop would go in those ones. Just having a quick look at the wheat market, and looking at wheat there, just coming up. Wheat and corn, there we are. Big falls from here, but once again holding on to support. So that in itself looks good. Just so we also know, CPOL's come out with their estimates, or they're close to their final full payments. That was around about 300, so we're quite happy with those results. Okay, just a quick look at copper, then we'll look at news for the day. Copper in itself, as we know, is the barometer, and as you can see, that's holding up quite okay. So everything else is up there. It does look like copper can come back a little bit, but it's only coming into consolidation, so I won't be too much concerned there. Just on the economic calendar now, and there we go. Obviously, there's a bit of data there. House price index there in Australia. Retail sales in Germany, probably a major one, and the States, we've got quite a bit there. Tonight. Pending home sales, ISM manufacturing, construction spending. So they'll be widely watched to see whether or not they'll be positive. If they're all positive, particularly on the construction side, then this whole thing will be reversed again, and we'll have a bit of a double bottom. So let's just stay close to what's happening there. Okay, that's about it from me. Just be careful tomorrow, 2:30. Obviously Melbourne Cup Day, but we've got the RBA reporting, so it could be quite fun. That's about it from us. Hope you have all a good day, and we'll talk to you soon. Bye.